Hi and welcome to Market Conversations. In this video, I just want to share my experience with dividend stocks and the mistakes that I have made regarding dividend stocks. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. I also have a Discord that I'm trying to grow, so if you guys want to share ideas and share some dividend ideas, definitely come check it out. I'll go ahead and leave my link in the description down below. So first, if you don't know what dividends are, we'll take a look at this article. What is a dividend and how do they work? Dividends are regular payments of profit made to investors who own a company's stock. Not all stocks pay dividends. So back in 2020, I invested in a lot of dividend stocks, as you can see here, starting from beginning of January 2020, AGNC, GNL, IIPR, TSM, NLY. These are really good dividend stocks and they also appreciated in price. I was getting about $100 for AGNC, $300 for GNL, $100 for IIPR, and then TSM as well, and NLY. These are really good passive income. And a time like what we're experiencing right now is really crucial to have passive income. And my mistake, as you can see here, throughout the entire 2020, I had dividends coming in as high as $1,000 for NLY, $1,000 for SPG, $2,000 for GNL. And I'll show you 2020, my mistake. I got rid of all of those dividend stocks. January 15, 2021, GNL $1,800. SPG $800, RKT, this was a one-time, and ever since then, nothing. I'm not getting any passive income now, and all the stocks that I'm in currently are down in value. So I basically traded all the dividend stocks and bought high speculative stocks, and I also lost a huge amount of money on June 2nd by over leveraging on AMC naked calls. It basically cost my entire portfolio. If I had just stuck with passive income, which was my first goal, I wouldn't be in this situation right now. Who wouldn't want to be able to receive $3,000 a month in passive income by just holding on to the stock? These weren't bad stocks. If we take a look at SPG, when I first bought in, the stock was trading at $60. I'll show you SPG. This stock has appreciated in value from $60 back last year to even a high of $170 in November. I know some dividend stocks, they don't appreciate as much. Most of these dividend stocks were REITs. If you don't know what REITs are, we'll take a look. So REIT stands for a real estate investment trust. Historically have delivered competitive total returns based on high, steady dividend income and long-term capital appreciation. Their comparatively low correlation with other assets also make them an excellent portfolio diversifier that can help reduce overall portfolio risk and increase returns. These are the characteristics of real estate investments. So if I were to start over again, I would still buy the same dividend stocks such as AGNC. There is a good calculator on TD Ameritrade, the income estimator. What you can do, you can put in the ticker and see how much they are paying in dividend. So for SPG, a very generous dividend per share, $1.65. Let's say you have 100 shares, you're going to get an annual income of $660. So another one that I had was AGNC. We're going to add that. This one is paying 12 cents and is paying monthly. So you'll be getting $44 every year, which isn't bad at all. Let's say you were to put in $5,000, 300 shares, you'll be getting $432. Another one that I had was NLY. This one was a good one. This one paid quarterly 22 cents. And we're just going to put 500 shares, $440. Another good one that I had was NRZ. The dividend actually went up for NRZ. It started at 0.05, and I made several videos on this. Every earnings report, they would increase the dividend. So now it's at 0.25, which is very generous. So we're going to put, let's say you have 200 shares of that. So let's say you have $25,000 amongst just 4 REITs. You would be getting $1,700 in annual income. These could fluctuate, and most of the time it goes up over time unless some drastic event happen. Dividend stocks are not bad. They're not bad at all if you're looking for passive income. Some of these stocks, they do appreciate in price. As we can see with SPG, when I first got in, it was $60. Now it's trading at $145. Not only are you getting an annual income, you're also getting the capital appreciation of the stock. I hope no one will make the same mistakes that I have. And I definitely learned a lot in the past few years. And basically, I am starting over. And I hope the market will rebound because I know a lot of people are hurting right now. Especially those who don't have any puts or hedges to protect their long-term investments. Let me know in the comments down below if you are investing in...
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule. And that's all the rules there are. I mean, if you buy things for far below what they're worth and you buy a group of them, you basically don't lose money.
Warren, what do you consider the most important quality for an investment manager?
It's a temperamental quality, not an intellectual quality. You don't need tons of IQ in this business. I mean, you have to have enough IQ to get from here to downtown Omaha, but you do not have to be able to play three-dimensional chess or be in the top leagues in terms of bridge playing or something of the sort. You need a stable personality. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd, because this is not a business where you take polls. It's a business where you think. And Ben Graham would say that you're not right or wrong because 1,000 people agree with you. And you're not right or wrong because 1,000 people disagree with you. You're right because your facts and your reasoning are right.
Warren, what do you do that's different than 90% of the money managers who are in the market?
Certainly most of the professional investors focus on what the stock is likely to do in the next year or two. And they have all kinds of arcane methods of approaching that, but they do not really think of themselves as owning a piece of a business. The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is